It's been a crazy week with more squeezes happening in the marketplace, and now I'm seeing a SPAC. The SPAC attack is back, and this one's interesting because this SPAC looks to be merging or reverse merging into with Beachbody for Beachbody to go public, so you can get those six-pack abs and also make it rain out there. So I'm going to show you some of this activity that I saw today, and this one specific opportunity, what we're going to talk about today, very wild card. So this is very speculative, and make sure that you keep it as that if this is something that's interested to you. So let's take a look at it. We're going to talk about FRX. So FRX today is a SPAC, the good old SPAC attack. That's why it's called Forced Road Acquisitions Corporation. So this FRX, and what I took a quick look at is it seems to be where it's possibly going to merge with Beachbody to be a new symbol called BODY. Yep, BODY. So Beachbody is going to go, P90X and all of them are going to go public. Interesting times in the marketplace, but more opportunities with more public companies creates more opportunities for traders or investors alike. So it's a great time to be in the marketplace. Now, what I'm seeing here specifically is typically these SPACs trade around $10, and then all of a sudden they get a little bit, like we saw back in January here, they get a lot of excitement. There's shorts that are short on this one. What I noticed or what I saw on this one was the short interest was about 20% last month, and that creates about 8 days to cover. So not as heavily shorted as some of the other ones, such as GME and AMC and so forth, that were more heavily squeezed or shorted at first. But this could be another one that we see a pop higher into these levels here. Usually we see 1, 2, 3, 4 days on these kind of super spikes, and that's what we could be seeing on this one as well. So what brought me to this one was that activity in this one was 400% overall on the call side. Well, 400% overall dominated on the call side. The focus is in these contracts, in the July contract here, and this traded off the market. So they called this in because it's a big trade, 9,000 contracts, but they bought the 10s and sold the 15. So this was a spread here. They bought the 10, sold the 15, and they did that for $1.10. So $1.10, and they're bullish up to $15 for the next 22 days. Now this one does have the intrinsic on this is $1.10, but they also have some extrinsic on there with about 12 cents of extrinsic. So they bought a little bit in the money, and also they did this at lunch, out of the money or in the money, and sold the out of the money. Now, the way that I would play this, if you're going to play for a moonshot, is I would look to something out in the 15-day cycle. So I think I opened it up here, and this looks a little interesting on this aspect. The 1250, buy the 1250 and sell the 1750 call spread. It gives 57 days. It gives it for the opportunity to pop higher. I don't know exactly the thing would be where this conversion happens. That's going to be critical because that conversion is going to move you into the new stock on there. So however that converts when that does happen, if it happens. But what we're playing here, or what looks to be positioning on, is just a pop higher here. So I think there's some activity in October, a little bit activity in October. So more focused right here on the August and July, mostly in July. But this would be 73 cents, so $73 per spread, and you're playing for a big, massive move higher, which then this spread is $5 wide. So you're making 75 cents, risking 75 to make 4.25. Not too bad if that works out. So not looking, if that were the case, don't look for the 4.25, but look for it to do a little bit of a moonshot and then get out. So that's what I have for you today. That's where some of the money was going. This is why it's going here with a hard to borrow stock here. It's got about 8 days to cover. This could be another little, I wouldn't say super squeeze, maybe a little bit of a mini squeeze.